Hey there, traders. This is Trader Tim from eminimind.com doing a trade recap video slash market analysis here for Monday, the 16th of December. This is really our last full week of trading. I'm going to be kind of wrapping up the year here on Friday. It is Expiration Friday, and that'll kind of take us into the end of the year because next week we've got Christmas holiday and then New Year's. So, a ways back, we talked about the 3215 level being kind of a long-term target, and that was really back when we bounced off of this 2375 area. And I really have to go out to a monthly chart to see where the low anchor point is. It's been so long. So that's from lows of 16 to highs of 18. So 2016 to 2018. The pullback was in the beginning of this year. And if you recall, or if you go back to some of those past market analysis videos, did a lot of buying down here, targeting the 3215 area. If we zoom in a little bit and go back to the daily chart, you know, we're basically there. I mean, 3200 is just about there. So, the last couple of weeks, it's been, I've been getting the feeling like this market could rally all the way into next November. Bought a little bit down here, put on some swing trade positions as well here. Same with over here. And long-term wise, if we go back to that bigger retracement that I've got drawn, the negative 60.18 seems, pretty far away, 36.50, but with some of the stuff happening with the China trade deal, with Brexit, with European elections, and then here in the U.S., the 2020 presidential election, we have kind of the uh, materials or the ingredients, if you will, to just go into a screaming run. And then, once November hits, you tend to get a lot of buildup into the presidential election. So regardless of who's on top throughout the months leading up to November, you kind of get that build up on the rumor of all these promises and excitement, and then election day comes and boom, the news, it's official, whoever's going to be the next president here in the US, and then things can kind of slide. Same with, China trade deal, Brexit, it can be a lot of buildup, and then sometimes when the news comes out, you can get the pullback. So we'll see what happens, but I'm all for the market continuing on higher if it wants to. Now, intraday, it's made it a little bit less eventful. The month of December, I really have not had a ton of trades, and not to say that that's a bad thing, but there haven't really been that many opportunities as well. It's one thing if you're not around or available to trade in a given month or a week, um, and that's why you don't have a lot of trades. But it's another thing if the market's just not giving a lot of intraday setups. So I want to talk about one specific trade from today. I mentioned a little bit, the swing trades that I've been putting on have been coming after these bull flags that we've had. So the market has kind of gapped up a little bit. It's pulled back briefly, and I've been able to enter above, the high price of the lowest bar in the pullback on the daily chart. Same with like over here. You get that run up, and the market pulls back a little bit, and then I can use that as my entry point, either a gap up at the open off of lows, like off of the pullback, so buying this type of a gap up, or over here, we just kind of creeped above the prior day's high and just was able to get in um, at that point once it did it versus the gap. So another gap today. You can a little bit clouded here with the chart identifications of the contract, but you can see a little bit of a tail on these 2 days here, but closing bullish, closing with higher lows each day, as well as higher highs, but like we haven't made a lower low since this dip. So we also haven't made a full pullback to a 50%. So it doesn't necessarily mean, when you see a big level like this, a negative 61.8 or even the negative 23, that we're going to go straight there, even off of this 23.75 at the beginning of the year, all the way back here. I mean, it was a big straight run for a while, and then a pullback, and got a little bit messy, and then another big straight run, pullback, kind of consolidation, and then now this run, the kind of the third leg, if you will, on the way to that 32.15. So I don't think we'll see a major pullback if we're gonna run up. It's gonna happen from here. We could draw like from this swing low to highs, and let's say if we go a little bit higher, we could get something from here up to like this 32.15 or thereabouts, and then a pullback would end up lining up with these prior highs. So that's some of the stuff that I look for as places for us to pull back to, add to longer term positions, or put on swing trading positions, or just look to short to that level. And then when I'm trading intraday, let's say we pull back down here to 31.50 intraday. Okay, I've got that in my mind. 31.50 is a bigger retracement, so looking for longs on the day trading side of things as we come down to this point. That's how you can use the daily chart or these bigger levels intraday as well. I mean, you could also trade like the micro ES or the SPY if you wanted to swing trade or hold overnight. It's totally fine to trade these bigger levels. So let's run into this morning. So today we had a gap up. The first 5-minute bar really didn't come into play. It was a gap, but you'll notice the next couple of bars were inside bars. And so the first 5 minutes goes by. If it gaps like this, I'll do a buy stop above and a sell stop below, just a tick above and below, to try and get in either a big sell-off, in this case to a gap fill, or a big rally to like a gap and go day. Today, we just moved sideways, and if I'd have left my order there, what ends up happening is, you kind of move sideways, you get this little fake out here where we go a tick or so above, and then the market pulls back, and then, I would have ended up being stopped out, unless I put my stop all the way down below the swing low. The other thing to consider, why I didn't take the first 5-minute bar today, is that the candle size was a little bit big. It was 5 points, and I like to see the candles around 4 points or less, just as kind of a general threshold, because if you have a really big candle or a big range, there's a better chance that, or there's less of a chance that we'll move outside of that range very quickly. So a couple of things kind of pointing towards passing, I guess you could say, on that first 5-minute play. But then if you just wait a little bit longer, you got this little pullback here to this guy at about 25 minutes into the day, and you could use that high as a buy entry, and then once it trades above, get in for this little run. But on the retracement side, we had, get rid of these and I'll redraw them here. We had kind of a ascending triangle, if you will, where the market was only going up, like only making new highs ever so slightly. So this was the morning here, and we formed the high kind of right away, a couple minutes after the bell. Then we made this high, then we made this high here, and they were only a tick or so above each other. But then on the low side, we were making higher lows, so that all looked good. And whether you actually draw to the low or just kind of come up like this or fit it in the middle, it really doesn't matter. We're just trying to get a sense of we're getting this triangle that is sort of rising, or a pennant, if you will, that's not horizontal. The highs are getting higher and the lows are also getting higher. So it's kind of tipped up, up and to the right here. So when I see that sort of thing, and when I also see, like, we didn't hold this retracement right down here. We broke the 61.8. So, okay, that's a little bit of a bearish sign. And then if I draw up the short and say, oh, well, we also broke the short side too. So both the long and the short broke. So that's kind of a, okay, let me back out. Let me wait a little bit until we break a swing high or a swing low and then reassess. Okay, so we come up, we break the swing high, and it only breaks by a tick. It also happens to be up at the top of the first 30-minute range, up here. And so you say, okay, well, let me draw it up and see if there's any kind of reaction here. It's okay to put an order out there, but a lot of times I like to wait for a little bit of confirmation just to see, because anytime we break highs by a tick and fall down, that's a can be a weaker sign. Either there's bears hanging out up here that are trying to short, or people trying to fade, or there's just not enough buying power to push the market up. In this case, we did make it all the way to its negative 23. So it's kind of like game on. Let's go to the upside. So drawing up the next, this would be the first move in the rally. Drawing up the next retracement move in the rally, and look in here where the 50% and this high, the top of the first 30-minute range, they're almost on top of each other. You got 97 and a 97 and a quarter. So most of you know that when the 50% is an even number like this, rounding up a tick is a good way to ensure that if price touches 97 exactly, that if my order is 97 and a quarter, then I'll be filled. If my order was at 97 and a quarter and price only came to 97, if my order was at 97 and price only came to 97, then I wouldn't get filled. Most cases, maybe 1 or 2% of the time, you get what I call a magic fill. So in this case, seeing the top of the first 30-minute range at 97 and a quarter, I went ahead and put my order 2 ticks above the 50.97, just in case it only came down to the 97 and a quarter, which in this case it ended up doing that. I also felt like, okay, 97.50, that puts my stop down at 96, so that's below the 61.8. And so I took the 97.50 long, and it got a quick reaction, a quick turnaround. And so another thing you've probably heard me say is that, when the market goes, the good trades, winning trades, tend to come down and reverse and go right away. And so I don't want to necessarily give it a ton of wiggle room. So I'm okay with getting, putting my order an extra tick ahead to maybe get in a trade that ends up ripping. And this one, it wasn't a screaming rally, but it did make some nice little kind of stair-steppy pullbacks, and I was able to bring my stop up to here below the right at 99.50, and so ride it up for a couple of points, get a first target hit, and tighten my stop for another couple of points on the second 2/3. From there, we kind of got that double top and then just crapped out. Went a little bit higher, but then really just moved sideways. There wasn't much to do through there. And as I go through, a lot of my trades from over this year, as well as especially in the last 4 or 5 years, I tend to have, or my trending, the pattern has been fewer trades, bigger profit. Part of that is from taking fewer trades, being able to better identify choppy conditions, places to stay out of the market, which leads to fewer trades, which leads to fewer losing trades, which means I don't have to have as many winning trades to have winning days and winning weeks. So in some ways, it's kind of all encompassing. If you can limit yourself to, you know, 1 or 2 trades a day, you can be a little more focused. You can stay out of the market just by only taking 2 trades. Let's say you're only risking 2 full stop outs. I mean, even if it's 3 trades, that's still not very many. There's really not that many days where I have 6, 7, 8 trades. And so by just reducing the number of trades you're going to take, it can help you be a little bit more focused and kind of check yourself before you put on a trade. It helps you keep the gains, because if you start off the day and you have 2 good trades, it's okay. A lot of times I talk about continuing to trade on good days. Well, in some cases, 1 or 2 trades could take you through the whole morning session. So time-wise, they may last a long time. Winning trades tend to last longer than losing trades. So 2 trades in an hour and a half could take up an hour of that session if you're just trailing your stop and the market's trending. So it also helps, taking fewer trades helps you limit the risk that you're putting on, helps you limit the time that you're exposed to uh, potential losers that then take away from the winners, and then helps you lock in, keep the winners that you have, so you don't just keep trading, 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 and then watching your winning day kind of roll over and come back to scratch. So those are just a couple observations I've had. Kind of use this time of year to go through my trades and review the year. I put a goals worksheet and some exercises up on if you just go to emoneymind.com. It's right at the top on the homepage. You can run through those. They're trading related and non-trading related for goal setting and things like that. So take advantage of those, and I hope everyone has a great holiday and a great final week of trading. Thanks, everyone. We'll talk to you soon.